and we get like bits and pieces information everywhere, right? From the news and other organizations. So
Correct.
this is more like an attempt to kind of democratize the data that we have in RE, and let's just everybody see it, and you can make your own conclusions sort of from based on what we see or what the data is telling us. So hopefully this will be helpful for everyone. Okay, let's see. We have we have about 7-8 participants. People are joining. So I'm recording this meeting, so I think even if somebody misses it, I will see if I can send out the recording to everyone, so that they can just go over that later. All right, so I think we can get started. So what I wanted to do is just to give high level view of the Florida real estate market. So we, like I was earlier mentioning, that we hear in the media and the news that hey, sort of like the market is crashing, sales are down and whatnot, right? Like it's like everybody's kind of either hoping for a crash or thinking about crash, or prices are going down. But you know when I look at the data, most times it tells me the story otherwise, right? Like it's not as bad as sometimes the things are projected out in the media, or people are telling. So this is just kind of an attempt to just take a holistic look at the this report and the data, and see where the things are headed. And we have in this report, we have the historical data also, so we can look back how the things were pre-COVID, and how the things are now. So it's kind of a comparison, because last 2 years I will say they are sort of, you know we saw like a real growth in the pricing, and the inflation, and in general home prices went up quite significantly because of the monetary policy, right? So we had such a low interest rate for a long time. I mean, almost like 2 years. So anything that we compare to the last year, we it may be tainted with the monetary policy being, the interest rate being low. So it is interesting to see how things were before the monetary policy or before the COVID. So that's the before the COVID, let's say, that is like our baseline, or this is more like a benchmark, right? So how the things were before the COVID, and then we compare the current data to that sort of benchmark. So this is our attempt to just look at the data through the historic lens as well as what's happening currently. So what I want to show first is the let's see this is the view of, you guys can see my screen, right? Is anybody having issues with seeing anything or hearing anything? Just
I
let me
can
know.
see and we can hear you well.
Okay, all right, perfect. Thank you, Sanjay. So this this is a report for March 2023, and this is for single family homes. So what this report is showing us for March 2023, we are comparing the price, so closed sales and the median sale price year over year, meaning that they're comparing those sales and the median sale price to the last year of March 2022, right? So how things were last year and how things are now. So they do this comparison because it takes out all the seasonality and all the like sometime the spring is the buying season, and then the fall and the winter sort of tapers down. So the best way to compare this is to year over year, and that's how you will always see most companies and all the things, they always report earnings, and they always have this year over year comparison to show where the things are headed. So real estate is no exception. We're doing the same thing. So in Florida, they have like a 22 MSAs. So MSAs is like politin statistical area. So this is basically, they identified these areas based on the population and the core of the city and the people living around the core. So when we say Miami, this it's really the Miami metropolitan statistical area. So the people living around Miami and Miami. And most times this is a fairly representative of the what's happening in that overall region, as a Miami and its suburbs and so on. So in Florida, we have 22 MSAs. So you can see on this page, they are listed different, with each MSA, they are showing the statistics. So I want to show how overall Florida is trending, right? So if we look at the top of the line, so we have a closed sales 26,161 sales in the month of March. So when they say closed sales, so that is really the sales um, that are closed in the month of March. So that doesn't include any pending, obviously doesn't include any active or anything. This is purely closed sale, meaning that these are the sales finalized and the deed is recorded and so on, and it's the transaction is complete. So we can see year over year change is 15% down. So last year we had the close sale of 59,554. Now it is 26,000. So obviously, there is a huge, sorry, this is a year to date number. And this is only for the month of March. So year to date is really Jan, February, and March. So this is a 3 months of data on the right side. And then this is a data for the month of March. So closed sales, median price. So you can see closed sales are down 15% compared to the last year in March. Median sale price is up 2.1%. So just a refresher, quick refresher, right? So the median sale price is basically, it's the price right in the middle of the and all transactions. So if I had, let's say, 100 sales, 50 of these sales will be below 405K and 50 of them will be above 405K. So that's how we look at it, as a median sale price. So we look at the median sale price because it's not sensitive to the high end as well as the low end, right? So another metric that probably I will share in the like a different report, but what we look at is the average sale price also, but that gets sort of tainted a little bit by the high end pricing versus low end pricing. But median sort of is not influenced by the lower end of the spectrum versus the higher end of the spectrum. So it can still get impacted by the number of sales in that month, like depending on how the sales are in that particular month. But in general, they are less sensitive. So that's the reason everybody follows the median sale price and the closed sales. So what I want to show in this report is, right, like one of the thing I actually was surprised that, of course, the Miami, Fort Lauderdale, and West Palm Beach, right? So that's our area, the Tri-County area or the Tri-City area. So our median sale price is like 570,000. So this used to be around like 600K sometime in like June, July. So it has come down, but you can see it hasn't really like come down from the peak last year in June or July, right? So maybe like around, so 600K minus 570K, so 30K. So it's really like 5% from the peak of the last year in June, July. The other thing I noticed is you can look at the Naples and Marco Island area. So their median sale price is actually 821K, and this is the highest in the Florida MSAs, which I didn't know. I don't know if anybody knows that, but seems like that's pretty relatively expensive market, even expensive than the Tri-County area here. The other thing I wanted to also kind of highlight really is you can look at this year over year percentage change for all the MSAs, right? So you can see like a lot of them are like positive, meaning that most MSAs showing the growth. There are some exceptions like this one, right? The Fort Walton Beach and Desetin area. So they saw, the negative growth of 5.5%. Then Hermosa Springs MSA. I don't know what these are, which cities are these, but they show negative growth. But I mean, of all the 22 MSAs, I mean, we see like almost 90% are showing the growth overall year over year. So in general, like the market is kind of steady and it's still, increasing compared to the last year. And then this report is for same report, but just for the townhomes and condos. So they split by single family homes and the townhouse and condo market. So this is like a 50,000 foot overview of Florida, what's happening in the Florida. So what we will do, we will jump into the Miami market. I mean, our market, the Miami, Fort Lauderdale, West Palm Beach, and the details of those. And there are a lot of, we will deep dive into like different costs and different segments and, different areas of that report. And you will see, hopefully you'll get some insight into the, what's happening in our area. So let me share the other one. Yeah. So this report is for, again, the same March 2023, single family homes, Miami, Fort Lauderdale, West Palm Beach. So we can see these are like you can say like a matrix that typically in the real estate we track. So these numbers are compared this year versus last year. And in this column, it shows how much is the change. So really the main matrix, I guess maybe in the map, you can see where we are, right? Here are those three counties, Palm Beach, Broward, and Miami-Dade. So here are different matrix here. So maybe almost like 10 or 11. And I added like one more, mortgage rate. They typically don't show this, but I want to look at the mortgage rates also, how they were last year versus this year, right? Because that has a big impact on the overall market and overall sales. So if you look at the closed sales, right? Again, the closed sales are all the sales closed in the month of March. So last year versus this year, we are down 15.7%. So of those closed sales, paid in cash. So these are like cash transactions. So, there is no financing or there is no mortgage on these sales. So out of 3829, we have 1177 that were paid in cash. Last year it was 1612. So the cash sales are down 27%. Now, obviously this number, the overall sales are down. So this number is also going to be down. But in terms of percentage, right? So how many cash transactions were a percentage of the overall sales? Like really, it's like 1177 over 3829, right? So we get roughly around like 30% transactions are paid in cash, which is pretty big. And that kind of also explains, why the prices are not like going down and they are being steady. The other important metric is median sale price. We just looked at it in the previous report. But yeah, overall, compared to last year, it is 5.6%. Again, the median sale price, this is like 50% of sales below this price and 50% of sales above this price out of this 3829. Now, interesting fact is, look at the average sale price, right? 860K roughly versus 926K. So this kind of sometimes show what is actually happening, right? So one metric is saying, yeah, market is growing. The other metric is showing that, the market is actually shrinking. So this can happen depending on, the luxury sales, right? So if the luxury sales getting more discounts, that will play into the average sale price. So most times is the higher end that impacts this average sale price. And if there is a more discount on those, that may drive the average sale price. And also in the each month, right, it's how many luxury sales we have, that will be the key driver for this average sale price. But in general, really the key here is, the median is up but the average is down, and the average is down most likely due to the luxury segment. So luxury segment, the way we define is, here is like 1 million and up is typically called like a luxury segment. And we will have a data to show, like how many sales we have in that category. Dollar volume is just purely just, like taking the sum of all the sales, and how much was that, right? So that is down 21%. Um, then median percent of original list price received. So this is also uh, important factor, right? To show where the market is heading. So last year, in that frenzy, right, with the low interest rate and everything, everybody was, and plus there was multiple offer situation. The market was highly competitive. Everybody wanted to buy. So you can see, obviously, they were paying at the asking price, or they were going even above asking price in many situations. But now the things are kind of stabilized this year. So we see like so roughly like a 4.5%, 4.5% uh, reduction in from the original list price. So this negative 4.5 is in relation to the original list price. So maybe let's say a seller, lists the house for 800K in the first place, right? But then the house sits on the market for a month, maybe 45 days, he doesn't get any action, doesn't get any offers. And then he start kind of, okay, I will reduce it by 25,000. So, the 775 is the new price. So when we look at the close price, right? So let's say that same home was sold for 750K. So what they're really looking is that 750K over 800K, right? That was the original list price. That was the price that the listing came with, not that 775 when he reduced the price. So that is very important distinction. Like people think, you know, this 4.5%, I can take off just 4.5% off from the current pricing. But that's, I mean, again, it depends on each transaction. It might happen that, some sellers are willing to accommodate that. But in general, like this 4.5% is uh, off is from the original list price and not the new, the updated or the latest list price. So if somebody really like jacks up the price, or maybe they thought that their house was worth a lot more than actual the market was showing, so that also will kind of impact this metric. But in general, this kind of trend is showing, yeah, there is some room for negotiation. Things are not as bad as at least last year. Like last year, it's kind of, you just had to give pretty much the asking price because of the fierce competition. Next important metric is this median time to contract. So you can see the median time to contract is really how long the market is sitting, how long the homes are sitting on the market. And you can see there is a bump from 12 days to 33 days. So that's a roughly like 175% increase. So this is kind of heading into the, like this median time to contract is also showing, things are not moving as fast as they used to. And the same thing is reflected here, medium time to sell. So that's showing, if you put the listing today, roughly it is like median time to sell is roughly around 73 days. Again, this is like 50% of transaction will have 73 days or less to close, and 50% will have 73 days or more medium time to sell. Let me know if anybody needs any clarification. Hopefully everybody is following me, what I'm presenting here. And then the new pending sales. So this is like how many listings went into the pending status, right, in the month of March. So that is also down 17%. So that's kind of interplay with these things, median time to contract, and then we see that, that also aligning with these other different metrics. Then new listings. So new listing is very important. So this is more like a supply and demand situation, right? So if you have a more number of new listings, then that supply and demand situation kind of gets a little different. But you can see compared to the last year, there is the new listings are down 20%. So we see there is a lot of like a hesitation from the people who want to sell, but they don't know if this is the right time to sell. People are thinking, okay, maybe the rates will come down and the prices will go up. Or, the people who wanted to move up, they're thinking, okay, if I want to move up, then I will get locked into the higher interest rates. So maybe I will just stay in my current house because I locked in really low interest rate last year, 2%, 3%, maybe up to 4%. So those kind of dynamics are playing out. There was a survey recently where they surveyed out all the people, mainly the sellers, and a lot of the survey results were that almost like 80% of the people who think they wanted to sell, but they are kind of on the fence because of this situation, that they have a good rate to begin with. And even though they want to move up or they want to sell, but they sort of thinking, I don't want to give up my low interest rate and get into the high interest, with the new home. So so that kind of contributing to this, the lower inventory that we are seeing this year. But again, everybody's situation is different, and like people who are closer to being empty nester, or they are done with the kids schooling and everything. Maybe they want to sell and just move to the area where they want to go. So those might they may be motivated to like being the seller. The other situation is if people have new jobs, those are the people who definitely have to sell. So those will be motivated to sell. So there is a lot of things playing out here, but this is a key number to watch, the new listings, right? So if this thing starts increasing quite a lot, then it will put a downward pressure on this sell price or the average sell price, because there is a more supply. And if the demand is sort of similar, then you will see some pricing adjustments or pricing corrections. But overall, it seems like right now the new listing count is down. Obviously, last year the interest rate were low, the prices were so good that so sellers took the advantage. They wanted to get their listing out, so they had more listings last year. But this year, with the interest rate we have and other things, it generally people who want to sell right now, they are selling. Then pending inventory, this is just similar to this pending sales, right? So how many listings are in the pending status? So those 5927. So those are also down 22%. Now inventory. So this is kind of also tied to this new listing, right? So inventory is really new listing plus anything that is unsold so far. So in the month of March this year, inventory has grown significantly, almost by 79%. So you can see it's kind of tending towards double, 100% more. And then because the inventory is more and the sales are down, your month's supply of inventory. So month's supply of inventory is really how many months it will take to finish off this inventory. So it's really uh, it's the way it's calculated is, you take this closed sales and you take this inventory. So it's the inventory divided by this closed sales that gives you that 3.1 months. And then last year it was only 1.3 month because we had so much sale going on, right? Like 45, 42. And then this last year it was 5682 was the active inventory. So this in general, like months supply of inventory, uh, what I will say is usually the benchmark is 6 months of inventory. It's called like a balanced market. So anything less than 6 is tending towards seller. Anything more than 6 it's tending towards buyer. So 1.3 last year, this was like really like solid sellers market, right? So now its situation is slowly improving, but it's still overall it's still favoring the sellers market compared to the buyers. So to be the really the buyers market, this thing need to be 4.5 to 6 months, where then you can start kind of having a lot of um, maybe some price corrections or price adjustments. And the last one is really, this is the one that they don't show, but I added that for everybody's benefit. So last year mortgage rate was 4.8% at this time, and this year it's roughly around 6.7%. So that's a jump of 39.5%. So that's, to say all this, this is really also the main key driver, right? Like the mortgage rates, that's playing the key role in the market. So just to give the like a how they are like a month to month how these things are going, right? So if we look at this closed sales, if we go from last year of March to this year, you can see the portion that I have highlighted. So this thing almost like since September, we are seeing like a drop in sales, right? 26% down, 37, 41, 37, 26. Now you see the moment, this is more like you can see from February to March. So last year, I mean, in February, we were down 26% year over year. Now it is only 15%. So is this the sign of kind of a reversal, right? So it was like in the 20s, now it has gone down only 15%. So we can maybe sense that something, it's also the spring is coming, and this is the buying season, typical, right, between the month of March to June or July. So but it's interesting to see that the things have slightly reversed compared to from February to March. Now, what are the reasons for that? Again, the monetary policy, mortgage rates, what happened in February versus what happened March. There were some dips in the mortgage rates, and people just took the advantage of those dips. So the market is very, very sensitive right now to the mortgage rates. So any upward, downward movement, quarter a point, it's swaying the market, the pendulum left to right or right to left. So that's something we will keep an eye, like how this thing is going forward in the April. And you can see in the closed sales, so this is the data from 2019 to 2022. So we can see we are at here March 2023, and before COVID, our closed sales were around like 5,000, roughly 5,000. So we reached those levels in 21, then came down, and now it's kind of trending down. But you can see that this year, Jan, February, March, you can see the sales are going up. So who knows, right? It's if the sales will continue to go up, and then come down again, as seasonality uh, kicks in. But we'll observe that. So this is a cash sale metric. So we are looking at now, everything that I shared here. We're looking every metric in detail and how they are performing over the different months. So cash sales is an important indicator because this is, it shows like an investor activity. Most of the time, investors are more pro to, first of all, having cash, and then also pro to use that cash for the transactions so that they can get investment return or better ROI and whatnot. So you can see even in that Jan to February, the cash sales activity has picked up. So you can see it was 741, 884. Now it is 1177. So year to date is 2802. It is still significantly down, almost 28% compared to the last year. But the trend here is really the cash sales have picked up in the last 3 months. I mean, at least in the month of March, the trend is sort of increasing. So that's something keep an eye, because if the investors, there are more and more cash transaction, that is also going to impact the prices. It may impact the prices. It will put pressure on the overall prices, like in the positive territory. And then this is a graph for cash sales from Jan 2019 to date, right? March 2023. So you can see the trend. So last year it peaked in March, then stayed about flat in those couple of months. Then it started going down as the rates were high. Now, this is also sort of played by the fear in the market, right? Like if you remember this months, right? March to June, these were the months where the Fed was so aggressive in jacking up the rates. Everybody kind of took a pause, and investors were no exception, right? So they were kind of thinking, I'm saying investor for cash sales, but I think most transactions are probably from investor, but there may be people who may not be investor, but they're still buying in cash. So in general, it seems like those 4 months it started to go down, and then it went down significantly later on, but now it has picked up again. So again, just continuing on the cash sales, you can see they are looking at cash sales as a percentage of closed sales. So they are looking at how many sales were, so in this example, right? So at the top, we have this 3829, this number, and 1177. So they are saying of 3829, how much are in cash, which is this 1177. So they are tracking the 1177 over 3829 and getting that, sorry, it's here, percentage. Yeah, so you can see here percent of closed sales in paid in cash. Like I was mentioning earlier, so we are in March, we are at 30%, and look at January and February, we were at like 35%. So when the prices were down, or the mortgage rates go up, the cash sale activity was actually going up here in the month of January and February. And you can see year over year change, there is no change in February 23 when you look at the percentage of closed sales paid in cash. But in general, you can see I'm surprised that the percentage change year over year for this metric is actually positive. I mean, everything else is negative, but cash sale activity seems to be continued even through these years. I mean, through these months, you can see it's actually has increased, like April, May, June, July. And it makes sense, right? Because cash sales are not really, they're not sensitive to the mortgage rate because they have a cash. Who needs the financing and mortgage? So you can see like increased activity here in the cash sales. and maybe they have a better bargain or better leverage, or the power that they can get more negotiations because of the cash. They can close the transaction, I will say, pretty fast, and they can remove the contingencies if needed, mainly the financing contingency. But in general, like Florida market is, heavily influenced by this cash transactions, and you can see why, because almost 1/3 of our sales are cash transactions. So that will weigh on the overall pricing. All right, so I guess, yeah, this is again the same graph. So throughout the years, you can see, like, it's the cash sale percentage really peaked in last year, which is shown here, like 35-36%, never went beyond 40%. But the current, few months or right now, it seems like that activity has picked up again. All right, so next is the median sale price. So this is just a trend. We will look at median sale price, so how it is faring from last year in March. So you can see, like, the gains every month, right? So right from the March 2022 up to this year, I don't see any negative number here. So that means every month the prices are increasing. So whatever we're hearing in the overall US market, right? Florida seems to be like a exception here. Like, we're still seeing prices have been going up. Now the rate has come down, right? Like, so if you see, it was growing at a substantial rate, but then after November, it's kind of sort of in the single digits. So the growth of rate growth has slowed down. But again, look at the February to March, it has slightly picked up from 4.2% to 5.6%. So that's something, again, it's a important metric to keep an eye. And then this bar chart is really for the the historic chart, right? How the things were before COVID. So you can see before COVID, maybe up to here, like maybe March of 2020, when the lockdown was in place after that. So you can see it was pretty steady, right? It's maybe 350 or something. But then obviously the things kind of went out of control in 21, and the 22 was like really, really like solid and exceptional year. The things went way fast, and things have kind of stayed that way. So this seems like a peak here, which is roughly 600K, like earlier I mentioned. Now we see from the peak, we're not that far off from the peak, really. So any talk of like crash and correction, and I don't know, like this data at least is not showing me, right? It's 600K, and for right now we are at like 570K. So that doesn't mean that it won't happen, but the data is the one that is telling us this story. Average sale price. So like I said, average sale price is really it is influenced and it is sensitive to the the high end and low end. So I don't know how much of we can make of the average sale price. But in general, you can see again here also the sale price is higher, almost for every month. But then November onwards, it's kind of up and down. November, December went down. January was up, and March. So this kind of represents little concessions, the prices. So that we saw that number, if you remember, like how much the original list price people were getting. Last year it was 100%, now it is 95%. So that kind of shows here, in the average sale price. Then this is a graph for the average sale price, historical graph. So like I said, it's, everything is dominated in 21, 22. So anything, we are still not to the pre-COVID level, and I don't know if we will ever go back to that level, but again, depends on a lot of factors. Dollar volume, this is just a byproduct of the sales volume, the number of sales and the average sale price. So you can see the dollar volume is continuously down. So this is really the result of lower sales, so lower dollar volume. But you can see Jan to February, it's sort of increasing, but again, there may be some seasonality, right? It's the spring season and the buying season now. So this volume may continue to go up. And this is a graph for that. So now this is an important one, right? Median percent of the original list price. So this is kind of showing the, is it seller's market, buyer's market, or somewhere in between. So you can see the last year, March through July, up to July, actually, we were at pretty much 100%. And then things started kind of slowing down. And then, up to March right now, it's 4.5% off from the original list price. And these numbers are actually different for different segments. Segments means cost segments, right? The luxury segment, the mid luxury, and so on, or the move up buyer, move down buyer, those kind of things. But in general, this data is aggregated for the entire, all the segments. Medium time to contract. So again, you can see last year, 12 days, now we are at 33 days. So this number is something to observe. So you can see Jan, Feb, March. So it looks like that number has reversed now, right? We went from 40 to 42 days, now 33 days. So that telling there is a buyer demand accelerating at some pace, right? 42. So it actually from month to month, it went down. So that's something we'll need to keep an eye. If this thing 33 becomes 32, 30, that will tell us that, hey, there is more buyers now. So that might put pressure on the pricing. And in terms of historical perspective, right? So what is the healthy market, right? So right now we are at 33 days, right, at March. So let's look at the pre-COVID, which is the 2019. So you can see February, March, we were at 60 days. And April was, let's say, maybe 55 days. So until we get to the 33 to 55 days, that will be the kind of a pre-COVID benchmark or pre-COVID level. So we are not there yet. And I felt that we were going there, right, based on Jan and February data, like 40, 42. So inclination was this 42 will become 45, 46, but then actually went down. So everybody started kind of, putting out the new, all the media and everybody, the talk was, okay, is this the end of kind of downturn, right? Like is this the bottom of the market? And that's why they were saying, because of these numbers, right? In February, the trend was, if you look at this trend, right, it continually from this June 13, 14, 19. So it's kind of always went up. Up to February, it went up, and then it reversed its course in March. So they are saying, so that's why the talk in the media was, is this the bottom of the market now? So it seems like maybe, but who knows? We'll keep track and we'll observe. But April numbers, we are almost at the end of April now. So April numbers will be available sometime in middle of the May month. So we will know how this number is, and maybe we can look at it next time. So medium time to sale. So this is kind of byproduct of this. This number increasing, this number is also going to increase. So again, here it's very similar trend to that median time to contract. So I don't know if I explained, but medium time to contract means it's really the listing was on the market for that long, and those many days it take for somebody to get into the contract, right? So they found a buyer and they entered into the contract. And medium time to sell is really, it's the entire transaction from start to end. So that's showing 73 days. So, kind of if somebody is selling, you need to plan out 73 days. In general, median 73 days. It may go up 100 days also, but in general, the trend looks like that's about 2.5 months. And that trend is similar to that other one, the median time to contract. And number of pending sales, I don't think we will go over, but in general, like we can see increased activity in March that correspond to the closed sales also. So these are the sales, these are pending. So that means these will become finalized, or these will get finalized in the month of April and May. And you can see it actually went up, right, from Jan to March. And this is a historical perspective for pending sales. So pre-COVID, this was roughly 5,500, and we are at what, 4,200. Now, new listing, I mentioned earlier, this is something to keep an eye. So we are seeing the count is lower year over year. So this, you can see like you can see maybe from June, right? So from June onwards, that trend kind of reversed. So people were eager to sell the properties in these months, right? March, maybe not March, but May saw the most listings, seems like 2.5%. So that maybe it's the season, right? Selling season, moving season, and the rates were still kind of low. So, and prices were still high. So those were things were playing on sellers' minds. So, let's get the best they can. So we saw the more listing there. It's the same thing for June. But then I think things reversed. July, August, September, and you can see like it's continually trending down. So people are sort of more fearful now, because the prices were slightly going down, not much really, because everybody was saying crash or maybe prices are going down, but the data didn't really show. But in general, those things might have played into their thinking. And of course, the interest rate were high too. And we will look at the interest rate chart also, the different Fed hikes that Fed did in last year, this year. But this is something to keep an eye, because the inventory, or the overall inventory does come from the new listing and from the other things, right, such as foreclosure, short sales. So we will show that in the last slide, that how those things are faring. But really the main driver for this is more and more sellers come into the market, then that will drive up the supply, and the demand and supply, that will decide the pricing. So here is the new listing chart. So pre-COVID, you can see here we were roughly at 6,000, 6,500 listings. Right now we are at 4,500. So that's still long way to go for the pre-COVID level, right? So as these listings increase, if they increase, then we will go to the balanced market. But everything is right now, it's still the lower inventory is keeping the pressure on the pricing, and the prices seems to be steady, or slightly kind of incrementally they are increasing at a slower pace. Then this one is, inventory. This is the active listings. So the difference between this is like these are the new listings that came in the month of March. These are the total listing. So how many homes are for sale in the month of March? So we have 10,000 homes for sale in the month of March for this our market. So that's a hoping 79% increase compared to the last year in the same month. You can see the inventory is actually shrinking from, if you see the month-to-month data, 11,000, 11,000, 12,000, now 11, 10. So you see the trend here. It's kind of actually the active listings or the inventory is decreasing. So this, again, like I said, the new listing is really driving the inventory, and the new listings, we are not getting enough listings to increase this inventory. So that's the trend with something to watch for. Now, in terms of historical perspective, this is the inventory, right? So look at the inventory pre-COVID. We were at like 22,000, maybe roughly around this time. And before the COVID, around March, we were at 17 or 18,000. So actually, inventory started decreasing even before the COVID. That trend was there before the COVID. That's something we can see here, right? It's kind of going down, going down. It went down significantly in 2020, 21, but then it started to go up in 22 because the prices were so good. So people started putting their homes for listing and cash it out. But you can see the inventory is still not there compared to the pre-COVID level, which is 22,000, and we are at like 10,000. So this is very important. We are still, we are still at a half of what pre-COVID inventory level was. And I don't know what it will take for this inventory to rise, right? It's more and more sellers come, because if the interest rate, if they go up, I guess, I don't know, maybe less and less number of sellers will be motivated to come forward or, sell the listing. But yeah, that's something we need to keep a track of, the inventory. Now, months supply of inventory. So this is in like how many months it will take to empty the basket, right? So we have 10,000 listings right now. So currently it will take 3.1 months based on the sales volume. So you can see that number has been pretty steady, 3.3, 3.4. So months supply of inventories has been pretty steady. Just compared to the year over year, it has, grown quite significantly. But I was saying earlier, this need to be at 6 months, 5 to 6 months to be a semblance of a balanced market. And look at the numbers last year in March, April, May, these were like literally only 1.3 months. Now these numbers are different for your local market, right? So this is really at a macro level, right? Like the Tri-County area, Tri-City area. But let's say you pick any city, let's say for Western, maybe Parkland or maybe Wellington, Palm Beach area. These numbers are going to be different for those cities, and they will show how the market is there. It may be, so for Western, I know that the market is about, I will say the inventory is about, it's maybe around 2 months. So that number is very different than the overall market. So real estate is hyper local. So like it's going to be influenced by the local conditions and local listings and whatnot, right? So if you have any questions for your local market, just send me a message or anything, and I can get you those data or the metrics and the numbers. So that's, and then now this is a interesting number, right? The closed sales by the sale price. So closed sales we saw like roughly those were like 38.29 this year. So this chart shows, okay, where these sales are happening in terms of pricing. So you can see most of the sales were actually in this bucket, 600,000 to I mean, almost a million, right? So 1,085, and then another number is this 400 to 599. That's where the bigger, the bunch of listings or the sales are happening in this price range. And it makes sense because your median price is what, 570 roughly, around 570. So that 570 falls in that bucket. So like I said, median is like 50% of the sales are lower than that price and 50% are above that. So that makes sense that this listing, the most sales are in this group, price group. Now look at the 1 million and up, right? 656, they are down 18%. Now this number 656. So let's say they call it like this, called like a luxury segment. So this luxury segment represents 656 over 3829, right? That was our sales volume. So that represents roughly 17% of the sales are 1 million and up. And then this is a graph, just a graphical representation. Last year, how many sales were in that bucket versus this year? So you can see actually year over year, the 1 million and up is actually higher. So that is showing pricing pressure. And the same way, there are more and more number of sales here. So as the prices go up, these sales will keep shifting, right? From this group to this group and to this group and so on. Now, earlier I was saying, right, the price group, how it affects like, let's say you have a home that you want to sell, and that price of that home is roughly, let's say 800K. So we can kind of have an idea how much time it is taking right now to get into the contract. So going by that example, 800K falls in this price range, right? 600 to 1 million. So right now it's showing us 36 days for median time to contract. But look at these, the median time to contract for this 400K to 600K, 28 days. So 8 days less than this. And then look at the 1 million and up, it's 52 days, right? So higher the pricing kind of is showing little more time will needed to get into the contract. And then obviously the 300 to 399 is 31 days. And then you can see, I mean, this is a graph of like, median time to contract. So now the graph is sort of disproportionately gets skewed by these, the smaller price range. I mean, there are sales in those, but I feel like those might be outliers, right? In terms of the overall data, but we know how many days it takes. So if let's say 600K to 900K, I mean, 1 million. So last year it was, I don't know, maybe, yeah, this looks like last year it was maybe around 40, 45 days. Now this year it is like 36 days. So same segment, but this year it's taking less time to contract compared to the last. And then even for this one, oh, sorry, they have reversed this. Okay, this is a light gray is the March and the dark shade is the March 23. So yeah, this year it's kind of increasing. So the more number of days, that makes sense. Monthly market details. So this one now, this is like a new listings by the initial listing price. So this is like when people put their listing in the month of March, okay, what prices they are putting into. So you can see like there are a lot of listing 1 million and up, and the same way for this. So this pushing the pricing, right, more and more. Like the more listing go in these buckets, it will put those are more like a seller expectation. They may put the price that they want, but in general, the market will sort of dictate, what the actual price will be, actual sold price will be. But in general, you can see the trend, there are more and more listings in these groups compared to the earlier ones. And then this is a listing, the same graph, but, like just comparing to the March 22. So this year we have a less kind of sort of number of new listing that fall into this 400K to 600K, right? The dark green is the March 23 data, but those listings sort of getting pushed into this. But even that was not enough. So, we still, the new listings are in they are down compared to the last year. So 600K to 1 million, the listing count is down compared to the last year. Again, its overall trend is that we are having fewer and fewer listings. So that's kind of showing it here, where they are placing those listing into and which price range they are putting into. And then inventory by the current listing price. I mean, this is crazy. Like if you see the 1 million up, that's 4367. So that's like 40% of your listings are 1 and up. And then 28% are between 600K to 900K. So anybody who is like a budget buyer or something, you can see like the relative inventory, at least in terms of the asking price, is so low. Up to 600K, you have these listings, right? 2070. So this will be what, 7100 and remaining. So only 2900. So like 29% of the listings are below 600K. So that puts the pressure overall on the pricing and on the market based on where the listings are coming at. And this is that one of the most really important chart, right? So is the market crashing? I mean, that's the question. Or is the market even slowing down? We saw it's slowed down, but it picked up this year from Jan to March. Now this thing, this report is really showing, okay, how many foreclosures we had this year versus last year, how many traditional sales we have this year versus last year. So traditional sales is basically just a traditional, right? It's just a regular sale that we typically go through. The listing comes on the MLS, then buyers and it's buyer's agent and listing agent, they work through and close the sale. So foreclosure or REO, so this is more like a bank possession. So you can see really like foreclosures are actually down compared to the last year in the same month. So we had 49 foreclosures last year at a median sale price of 395,000. So even for foreclosure, you can see median sale price has gone up from 395 to 450. So imagine, I mean, there is a foreclosure. I feel like there is a lot of competition even for the foreclosure. So first, the inventory is not even there. It's going down significantly, 45%. And then the median sale price has actually ticked up almost from 395 to 450. So that's like roughly 14% increase. Now, closed sales 11 to 17. Sorry, 17 to 11. So this is for the short sale, right? So again, that's compare this volume, right? 1127 to this number, 3799. This is really, I don't know, like this is like a 0.5% or 0.25 maybe. So 27 and 1138. So this is roughly, let's say 40, and this is like 4,000. So yeah, like less than 1%, I will say. And to be fair, like this number, like if you want to benchmark or compare to the 2008 crisis, we had like roughly 5%, 6%, and in some cases it went up to 10%, the foreclosure and short sale together. So right now we are less than 1% in terms of the closed sales. And then this is a graph for the foreclosure, I mean, like a historical perspective. So you can see, I mean, 2019, we still had some activity going on, foreclosure, right? So 2019 to now, the green lines shows the foreclosure median price. even that price has actually gone up, and you can see, and it is quite cyclical. It goes up and down, up and down. It really depends on how many foreclosures are there in that month and what pricing they are. And so there is that data is not statistically significant because of such a such a low number of sales we have in that group. But you can see in general, this traditional sale median price went, this kind of peaked around here, went down, and this is like a 2022, late 22, and then it stayed, it went down, and now it's slowly picking up. And short sale has really like a volatile kind of sale price. Again, that data is so small, it is statistically insignificant. So unless these numbers, the sale volume really go up, there is no point in looking at that data. But this at least shows us where the market is in terms of, the foreclosure and short sales. So people may tell you, hey, these things are happening and foreclosure is happening, but we go by the data and we verify that, hey, this really the truth? And many times we'll find the other way around. So that's pretty much it. I think what I will do, I will open up for any questions. If you have any questions or anything, if you don't have anything right now, that's fine. You can send me a message or maybe put that on the WhatsApp group that we have. But I'm open for any questions. If anybody has any questions, comments, or let me know if this thing is useful to you, if any changes you think we can do. There is a lot of things we can, there is a lot of data we can digest, but in the interest of time, everybody's time,
Yeah,
I
hello,
just
this
wanted to
is
see.
Sure.
Sure.
How all these charts you showed, the average buyer or a seller who don't have access to these, right?
Can you repeat that? I couldn't hear that.
Yeah, the average buyer or seller don't have access to all these charts and graphs. So basically, we have to contact the real estate agent.
Yeah, so you have the access to the general charts, but these are member-only charts. So the details you may not have, but some of the charts you may have the access. Like overall, the Florida market that I showed earlier, that one you have the access to those charts. But these are the member-only. Like a real estate agent can pull this data and get that report. But at a Florida level, there are some areas where you have and some areas you don't. I don't think this one has the access. But there are like a lot of public sources, data sources that I can always point out. Or I can share this report also. If anybody wants, I will be happy to share this report. But I can point out to the links where you can get the public reports also. So for your own consumption. So you can, look at that. And if you need this, I'll be happy to share that.
And how is the market for renting the house? Is there a lot of demand for renters?
So overall, I see the rental market is kind of stable right now, and rental market is, I will say, it's pretty solid. There are not, again, it's kind of, see, like the lower sales here also sort of plays into the rental market, right? So more and more people are not buying. That means people are sort of either staying staying in the same place, or they may move to another place. So it kind of indirectly benefits the rental market. But from what I have seen, rental market is stable, and there is pretty good, I will say, demand for rental market also.
Are there companies which manage the property? Like most of them are real estate agents who are interested in buying and selling. But are there
There are
companies
companies who manage these properties, and I can get you in contact with some of them, or at least a couple of them at least that I know of.
Okay, thank you.
Sure. All right. Anybody else? Any questions? Anything?
Shailesh,
Yeah.
I put the question in the chat.
Oh, okay.
So if we want to invest, um, how you find out what is the rent going on in that area or that particular property?
Yeah, so I think that's a good question, Sunny. So really the way I do it is when you if you look at that area, we go in the MLS, if you zero in on the zip code, we can look at the rental comps in that area. So the rental listing is I will say like a rental listing is a fragmented kind of data right now. So there is a lot of data in the MLS that we can look at, and there is some data in the Zillow also. So what I do is I look at the MLS comp also, and I look at the Zillow comp also for that particular area. And then, combining those two, we can get a fair idea of how much is the rent. So I will look at the Zillow and see, okay, what the rent estimate is, and then I will verify that rent estimate based on the MLS rental comps that we have. So we can, do both ways. And then, let's say if you pick an area, we can see, what is the investor activity in that area, like how many units were purchased by investor, how many units were primary owners, homeowners, and how much they were rented for. So there is a lot of data we can leverage to see how much rent we can get. That's typically actually I have done a few times in the past to see, if this investment will make sense or not. So definitely I can help you with that.
Okay, thank you.
Welcome.
Can you share your email address?
Yeah, sure. So let me, in the chat, I can put it there. And let me share my information also. So you can see, so I just changed my background. So you can see hopefully you can see the information there also. So I put my phone number, my license, and email is there, phone number is there. So yeah. Let me... Okay. All right. So I guess if there are no questions, we can wrap this up. Yeah, let me know. You can let me know later, maybe if this is useful, or what I want to do is, we can do this monthly, review the latest data, right? Now it will be like a April data available sometime in May. I can just record it and maybe share it with you guys, or we can have this Zoom meeting. Either way, it's fine. But thank you everyone for joining this meeting. Really appreciate your time. Hope you have a good weekend.
Thank you, Shailesh.
Yep.
Have a good
Welcome.
weekend.
Thank you. Bye now. Bye-bye.